and YouTube land, my Facebook members, my Discord members. The Discord members are awesome. You guys, I love seeing you guys work together. I love seeing the politeness where no question is dumb. Nobody gets disrespected for asking a question, no matter how simple it is. New traders, they have questions, and they deserve to be treated respectfully with their questions. I see a lot of stuff that happens in groups, and it's rather disgusting sometimes. In this video, we're going to go over the S&P 500 and the SPY and some technicals. We're going to look at several different time frames, daily, weekly, monthly. We're going to go back 21 years or so and just look at a few things, go over why I think this 200 SMA is important. I do want to cover a few things really quick about the market, some economy data. Mester, Barkin, Evans speak tomorrow. Powell testifies Wednesday. We also have Harkin speaks Wednesday. Jobless claims on Thursday. Powell testifies again. Consumer confidence on Friday. Then Fed daily speaks. So Fed Powell will be speaking 2 days, getting grilled for multiple hours over 2 days. So this is all probably going to be catalyst market moving information that, of course, here in the Discord, we will be plugged into two squawks. We will know what he's saying. We will know what's going on, and to be able to take advantage of all this. So we're seeing losses, not seen since the Great Depression. BlackRock, and all this is coming from Bloomberg. BlackRock put out a statement: "We are not buying this dip because it's not a dip. Assets do not look cheap to us at this moment." We've been saying stop buying the dip. This is not a dip. It's nothing that we haven't been saying right here in the Discord, even in the Facebook group. We have been seeing margin calls go out. Now, if you do a Google search on what they're searching for on Google, you're going to see a high rate of margin calls being searched for. So that's telling me that retail is being hit, because retail is trying to figure out, actually what a margin call is, because they're deep in margin, have no idea, what they're doing. It's using margin and not understanding what's going on is just not a very good idea. Goldman Sachs has also put out a price target of 31.50. Now, Goldman Sachs has been playing both sides of this fence here. They can play the market maker, and they are playing, the buyer, the seller, the trader. So I do listen to Goldman Sachs when it comes to price targets. Now, will we see 31.50? I don't know. But let's look at S&P 500 to start with. This 200 to me is a big area. So the 200 is at 35.02 right now. Tomorrow we're going to open up right around, this is the weekly chart. We should open up right around where the support level is, because it will move a little bit. And that's pretty much my target right there, is the support level. You can see this tabletop here, and you can see, depending on how you draw it, it's a zone here. You got a little room for error one way or the other. You can also see that we're taking out 2020. We're getting ready to take out the 2020 highs. Market's just ugly. You can get a good look at the COVID dip right here, the volume that was on the COVID dip. You can see our volume is high here as well, getting higher in this period of time right here. From here, you can see this was the time from COVID till now, and you can see how the volume started to die off. When the market starts pulling back, the volume is growing. MACD is very ugly, RSI, and obviously the price comparison is the S&P 500. So that indicator is not doing us any good right now. So this is a 21-year chart of the S&P 500. Now, just want to point out the 200 moving average. We bounced here. We took it out here. So we were able to pull down below the 200 during COVID, but we bounced here. We didn't quite even hit it there. We took it out, couldn't hold it very long, got back up there. But this is 2007, 2008, 2009, 2010. A lot happened in the market right then and in that time period. Um, you know, 2007 bear market, 2008 financial crisis, 2010 flash crash, just a lot going on in that time period, and we did take the 200 out. And one thing I want to point out is the biggest reason why we're looking at this charts is this does not look like this. This pullback does not look like this. This pullback obviously doesn't even look like that. It's looking more like this. You got that notch pulling down, you got that notch, and you're continuing to fall. We had well, we'll talk about that when we get to the S&P. All right, so this is the S&P. We're going to try to keep this video as short as possible. This is the S&P 500. This is a 9-month daily chart. You can see our MACD's bearish, our RSI is bearish. Right down here, every time we do get here to the 30 level, we usually get a bounce, and we're kind of expecting a bounce now. We are oversold with the oscillators. You can look at our trade ideas videos, and you can see where our oscillators and our put to call ratio is sitting. So this is a weekly chart that goes back to just about 2017. Once again, this is COVID. This is the SPY during COVID time. This is a falling wedge that we have taken out already. We were expecting a bullish move on here, and we got it. We seen this candle. We already knew we weren't going back to all-time highs, but when we seen this candle, we knew it was time to not be so bullish anymore. We were going to be heading down. You know, we got this pop we talked about a week ago. We talked about how bearish this candle right here was, how bearish these 3 candles were. Got a big gap down. As soon as we opened up, we gapped down. And we talked about those candles. So these are some levels I'm expecting. So we've already took out the 363. We said to look at 363, 364 as a zone. Now, I'm looking at right here, you know, the 343-ish level, between 340 and 343-ish, depends on how you draw this line. This 200 MA will move up a little bit tomorrow when the market opens up. But you can see we are working on 2020 highs as well here, trying to take them out. You can see the volume coming in. The volume is growing, just like COVID. You know, the volume was growing during COVID. So this is the S&P 500 weekly chart. Once again, you can see our 200 SMA. We took it out during COVID. We touched it here, pulled back. Looks like we did wick below it. Nothing major, one candle. We did get below it here during the 2007, 2008, 2009, 2010. This was a pretty rough time for the market. And you can see we got below it then. There was some turmoil going on back here where we never even had the chance to gather the momentum. We started gathering it right here when we crashed down. But once again, look how the pullback here looks. We did touch the 200 here and push up. So I'm wondering if we're going to come down and maybe we can touch the 200, and I'm hoping that we can get some oversold reactions before we get to the 200. You know, but I am expecting to get to this 200 now. Goldman Sachs' price target of 31.50 would put us about 315 on the SPY. So they are looking to take the 200 out. But to me, the 200 is a pretty serious level here. And we do need to respect that. We need to, I do believe if you go back right here and look, I do believe that there's some levels in between. Let's see if we can get a decent. I should have put a better chart up. I do believe 350 is an area to watch now before we start watching for the 340-ish area, the 343-ish area, and the 200. So this week, you know, we're going to start looking for around the 350-ish area. We will have a better number on that tomorrow for the Discord. So the weekly chart, and this is just a daily chart. Just another chart that I keep and look at. Once again, it's a 20-year daily chart. You can see, you know, I was curious. I had these marked off trying to see what exactly comparing these pullbacks. And as of right now, I do not believe that this is the type of pullback we're going to have with a quick, speedy, V-shaped recovery. I think it's going to be more choppy. Now, we did get a V-shaped recovery. Once we start going up, there's going to be a lot of money to be made. But right now, believe it or not, there's still a lot of money to be made in this market. So once again, this is the daily chart. We are below the 200 we were looking at was the weekly. You can see we have the 200 on the daily is rather important as well. We don't get below it much, but we creamed it, months ago. But you can see when we crossed the 200 here, we didn't get that far below it on these two pullbacks. And we actually didn't get super far below it. I mean, it's a good ways below it here. But the 200 on the daily stays pretty tight. And you can see how the 200 here is rolling down just like it did right here. Never really had time to roll here. Never even had time to roll here. See how it's rolling down? That's setting our trend. So this is, obviously, we're already in a confirmed downtrend, but this is helping to show us the way that we are heading. And as you can see, we're looking more and more like this right here. This time of turmoil, there was a lot going on then, and unfortunately there's a lot going on in this market now with the war, recession. We talk about this stuff daily in the Discord. We have a food famine coming up, whatever they're going to want to call it. We're not even feeling yet. We're having stores with that can't sell what stock sell their inventory. They are overstocked. So I believe this is the last chart. Let's see what else we have. Oh, okay, this is the monthly. I do apologize. Once again, there's the boxes I had drawn out on those pullbacks on the daily chart. So this is the monthly S&P 500 chart. You can see just steady downtrend here. So this is the 50. If we take the 200 out on the weekly, the next target would be the 50 on the monthly is what I will be looking for. So you can see right here, the 50 has been respected. When we did get below it, we were below it pretty seriously. It flattened out here, started to send a little bit, but you can see it's a pretty powerful tool. But you can see the 9s already rolled, the 20s rolled. Even here at COVID, these barely, you can see a little dent here, but they never turn down. We're turning down. See how we're turning down here? How we turn down here? See how we're turned down on the 9, starting to turn down on this 20? I think we're in for a more of this type of pullback. I think we're in for some more downside to simplify it, to keep everything simple for everybody. I think we're going to see a, considerable amount more pullback. I do think we will see this. I'm hoping we don't go to the 200, but I do think we will get to this 50. We're going to see the 200. That's a major level, and that's a major level on all charts. Let's watch them all. A lot of assets we've already hit it, but like Apple and Microsoft, we added some of those. Go watch the last trade ideas video where we added some weekly charts that will help understand where the 50 is on a lot of these assets. And this is not financial advice. This is for trend catalyst traders. Is for educational purposes only. Personally, I will be looking at August 19th 355s. I'm hoping to get a bounce to buy them on the upside to get them a little cheaper. I'm looking to enter half my position. So just for an example, if you wanted to, if I was looking to buy 2 contracts, I'm only going to buy 1 now. I'm going to look to add the other. It may be possibly a dip if we do get an oversold bounce, but I'm not going to buy these extended like this. I'm only going to enter this position if we get an oversold bounce, some kind of oversold bounce. So I like this. This has about 62,000 in the open interest. So I do like this setup. It's giving me 60 days for buying some time, giving me 60 days to get it to work. I do believe there's more downside. Like I say, if you follow that trade, please paper trade only. You need to consult a financial advisor before you deploy any real assets in this market. I am not a financial advisor, uh, but that's what I'm looking to do. Well, I hope this helps. Let's be safe. Let's protect that capital. If you're interested in wanting to learn how to trade options, option flow. Oh, let's talk about option flow. The S&P 500 is very bearish. I mean, huge, $220+ million orders. Seen $170+ million put order in there. Very, very bearish. Very large flow. Like 70 to 80%. I haven't really done the math yet. I'll have that in the morning. 70 to 80% bearish on the S&P 500. The SPY is chilled out. Seems like it's more even, really. Not a lot of big buys came in on Friday, and I think a lot of people are expecting. Well, for one, it's really hard because we had OPEC week, quad, which it's really hard to judge because a lot of stuff's coming in, closing, and opening. But that one asset I just talked about, or one put order I just talked about, was above the ask. We don't really know what they're doing. We never know what they're thinking when they open or close these positions. We do use it to help us in their decision making. So if you would like to learn more about anything we're doing here, my daily Tesla SPY trade alerts, uh, please join us in our Discord, hang out with us in the trading room. We do have a Facebook group. There's a lot of free educational material in there. Also, follow us on Twitter. Follow us on Instagram for Catalyst information. I hope everybody is having an awesome day off. See you in the trading room tomorrow. Have a good rest of the day and night, everybody.